Have you ever wondered about the waves of Bitcoin halving and how they affect market trends? Let's dive into this fascinating subject. Bitcoin halving, as the name suggests, is the event where the number of new Bitcoins created and earned by miners is slashed in half. It's like a heartbeat, a pulse that happens every 4 years or after 210,000 blocks are mined. This isn't a random occurrence, oh no, it's a key part of Bitcoin's monetary policy. A policy that's encoded deep within its software. It's a kind of digital DNA, if you will. This halving process is a fundamental mechanism that controls the supply of this digital asset, ensuring its scarcity and value. It's a bit like mining for gold. The more you mine, the harder it gets to find more. Now that you understand what Bitcoin halving is, let's delve into how it impacts market trends. So, how does Bitcoin halving affect the market trends? It's simpler than you might think. Imagine a scenario where the supply of a highly demanded commodity suddenly drops. Basic economic principles suggest that if the demand remains the same, the price of that commodity could rise. This is the fundamental logic behind the increase in Bitcoin's price post-halving. Let's break it down. Bitcoin halving is an event where the reward for mining new blocks is halved, meaning that miners receive 50% fewer Bitcoins for verifying transactions. This halving process reduces the supply of new Bitcoins. Consequently, if the demand for Bitcoins remains steady or increases, the price could rise. Now let's add another layer to this. Miners, the ones who get these Bitcoins as rewards, might decide to hold on to their Bitcoins, anticipating a price increase post-halving. This expectation could lead to a decrease in the number of Bitcoins available in the market, thereby driving up the price even further. But are we just theorizing here? Not at all. Let's take a look at the past. Bitcoin halving events have historically led to significant increases in Bitcoin's price. For instance, the first halving event in 2012 led to a substantial price increase over the following year. Similarly, the second halving in 2016 saw Bitcoin's price reaching new heights in the subsequent year. However, it's essential to note that while the price increase following a halving event might seem like a pattern, it's not a guaranteed outcome. Many other factors, such as market sentiment, regulatory news, and technological advancements, can influence Bitcoin's price. So, we can conclude that Bitcoin halving has the potential to significantly impact market trends, primarily through its effect on supply and demand. As we've seen, Bitcoin halving can significantly influence market trends. But how should you navigate these trends as an investor? Let's explore. In the face of Bitcoin halving and its potential to shake up market trends, what's your best move as an investor? Bitcoin halving is a momentous event, akin to a seismic shift in the cryptocurrency world. It's a time when the rewards for mining Bitcoin are cut in half, and it can bring about significant effects on the market. Now you might be wondering, how do you navigate these choppy waters as an investor? The first rule of thumb is to take a long-term view. The cryptocurrency market is notorious for its volatility, and Bitcoin halving is no exception. Prices can fluctuate wildly in the short term, but getting caught up in these fluctuations can lead to rash decisions. Instead, consider the long-term prospects of Bitcoin. Historically, Bitcoin's price has tended to increase following halving events. But remember, history doesn't always repeat itself. The future is, by nature, unpredictable. So, do your own research, delve deep into market trends and projections, and make your investment decisions accordingly. Your risk tolerance also plays a crucial role. If you're comfortable with high-risk, high-reward scenarios, you might choose to buy before a halving event in anticipation of price increases. This strategy, known as buy the rumor, sell the news, is used by many seasoned investors, but it's not without its pitfalls. If the price doesn't increase as expected, you could be left holding the bag. On the other hand, if you're more risk-averse, you might choose to sell during or after the halving event. This is a more conservative strategy, and it can help protect your investment from potential price drops. But here's the most important piece of advice. Always do your homework. Understand the ins and outs of Bitcoin halving. Analyze market trends. Consider your financial goals and risk tolerance, and most importantly, make informed decisions. Remember, Bitcoin investing, like any other form of investing, involves risk. Make sure to do your homework and make informed decisions. Investing wisely during a Bitcoin halving could potentially lead to significant returns. So, we've covered quite a bit today. We dove into the concept of Bitcoin halving, a phenomenon that halves the reward for mining Bitcoin transactions. We explored how this event impacts market trends, often triggering a surge in Bitcoin's value. And we've outlined key investment strategies to help you ride these waves, like diversifying your portfolio and timing your investments wisely. We hope this video helps you understand the waves of Bitcoin halving and how to navigate them as an investor. Stay tuned for more insights into the world of cryptocurrency. Until then, happy investing.